All right, everyone. Basically, our models are back under an operational buy mode today. I'm not sure if I'm going to flip it though until we make new October highs. So this is a very odd situation. Welcome to the market. But basically, with the above average volume move and us retaking all of the sell off from the previous week, we are now under an operational buy mode on the NASDAQ 100 and basically the NASDAQ. The S&P 500 also super solid day above the 200-day moving average, but below average volume is going to keep me neutral. It's going to take a breakout above those late October highs before this model switches. NYSE, same similar situation. Dow Jones Industrial Average, same similar situation with the below average volume today. And the Russell 2000 just has a lot of work to do. So really what we have here is the NASDAQ 100 and the NASDAQ are switching to operational buy modes. The rest of the market's neutral. And I tell you what, guys, we're now fully invested. Unfortunately, I had half of my personal intraday sell stop, so meat hit at the morning as 239 was my sell stop. This is the kind of day I had today despite today's good market. It's been a very rough 2 weeks continuing for me. Just too much in commissions, too many trades, no perfect signals, just a lot of work. Just a lot of work and a lot of missed opportunities. So meat, I'm out of half of meat this morning. So that was kind of unfortunate. Also NHTC, I'm completely out of it. But on an end-of-day basis, Tree has failed for sure. I'm out of Tree, but on an end-of-day basis, Tree is a 100% sell signal. And 50% sell signals are DTLK with the move below the 20-day moving average. 50% sell signals in CHFN with the move below the 20-day moving average on above average volume. And then SRS is closing below the most key low level, 47.79. Should not have broken below it if it was healthy. It did so. So basically with SRS, I'm out of 75% of it. The final 25% of the position will come off at 46.42 unless this ETF closes below the 20-day moving average before closing below that gap up low a day, and then we'll switch it to 50-50. But I think that it's a little bit away. Yeah, so it could still technically close below 20-day moving average before closing below that gap up low. But that's it for SRS. So those were the main big plays. Also UVXY, my hedge got hit, so I was long at 29.32. First sell stop is 28.79. Final sell stop is 24.90. But I went ahead and put on that UVXY hedge, but it was only 2.5% of my position that I put on today. But because of that, it's left me a little short on cash. So STZ, my ad didn't get hit because it gapped up and didn't trade down to 135.33. So that order is being canceled so I can buy all of these new long positions tonight. And there are a shitload of them. And God damn it, none of them are sucky enough for me to be like, I'm not taking it, too risky. And none of them are good enough to be like, all in. So once again, we'll piecemeal the portfolio together. I have about 60 positions that I'm holding in 2 accounts, and that's before this market's hitting new highs. But the good news is that it's 60 positions and not 100. I could hold up to, I'm pretty sure, a couple hundred before I would become overwhelmed. So this isn't a big deal to me, but I'm going to let you guys know one more time. I would much prefer to have 10 stocks, 10% long signals in each, 20 stocks, 5% long signals each, or the most incredible thing ever, which will never happen ever again, 5 stocks, 20% each. 10 stocks, 10% each is the ideal portfolio. But right now, we got 60, and that's because these are the kind of long signals we get. So our first new long signal is Baidu Corporation. Baidu Corporation is not a Cancel quality stock. It's a perfect speculator quality stock, though. So pocket pivot point signal today on just barely above average volume. And, of course, BOP is going the wrong way. So Baidu, even though it is a NASDAQ 100 quality stock, it's still only going to get 2% account capital. If BOP would have rose, I'm willing to give NASDAQ quality stocks 2.5% long positions for canceling, 2.5% capital allocated for being perfect speculator. But as it is with Baidu, this thing could easily fail. So let's just keep it simple for right now since I'm fully cashed out. If I go 2.5%, there's things that I got to reduce positions in the other long positions that you're going to see here in a minute. So I'm just going to keep it small. So 2% in Baidu. And then the best probably signal overall is JBSS, because JBSS is can slim quality, and it's also pre-perfect speculator quality, with it being up 1.5 times its 52-week lows instead of 2 times its 52-week lows. Maybe it's 1.75%. I don't even know what I put in this scan anymore. Might as well look at it just so I know. 1.75. Okay, so it's near there, so it's close enough. But JBSS, yeah, can slim quality, beautiful. Perfect speculator quality, beautiful, with very clear-cut loss levels. BOP's going the wrong way, though. I'm telling you what, guys. In a strong market with a strong tape and everything, you see a move like this off the lows, you get more volume and you get a BOP surge. So the fact that everything can't line up is another reason why I'd much rather do 4% in this name than 5%. But this is a 4% signal, as our cut loss levels are clear, 58.99 and 58.67. So we don't risk much if we are wrong. So those are the two higher quality long signals. Also, lock is an ad signal tonight. Pocket pivot point signal. This is can slim quality stock. It's also a recent earnings winner, but earnings are so far away that that's not really going to be added into the equation. And it's also in my confirmed in my price volume BOP scan. So it's a can slim ad, 1%. Price volume BOP scan 0.5%, so 1.5% long position in lock. Very limited risk if we're wrong. I'm still going to go for this one. I'll use 13.95 as the final sell stop, but very, very nice chart pattern, you know, on the short term. Extremely tight coiled price action. Should resolve itself higher if the market goes higher. And then Hubs is a pre-perfect speculator quality stock. This stock is also only up 1.75 times its 52-week low. It is not up 2 times it yet, but pocket pivot point signal. This one is more correct. Surge in BOP, surge in volume, surge in BOP, surge in volume, closing near its highs. However, it's a pre-perfect speculator scan stock, not perfect speculator, and you're about to see 4 speculative long positions, so 2% for Hubs, and then, or excuse me, because it's an ad, 1% for Hubs, since it's an ad, not a new long, and it's 0.5% for being price volume BOP. If this is a new long, it's 2% for being perfect speculator, 1% for price volume BOP, for a total of 3% position. As it is, it's 1 and 0.5, so Hubs. Now we get to the speculative names. ePay, this was in my price volume BOP scan. It's got the price surge, the volume surge, and the BOP surge. Got to take it. It's better looking than most of my high quality stocks. So ePay, it gets 1% for being price volume BOP. I'm out of cash. That's all I can get anyway. But you know what? Even for a move like this, you could do 2%. You got the PPP signal, you got the BOP volume and price surge, all good. And then STRL, more speculative, but it's a recent earnings winner. You got the pocket pivot point signal. You got a slight surge in BOP. It's still going in the right direction. You have plenty of green days already. And you got a surge in volume. So volume surge, small BOP move higher, price surge, pocket pivot point signal following an earnings win. You could add more for an earnings win if you want, but I can't because I'm out of cash. So 1% for being in the price volume BOP scan. You could do 0.5% for it also being an earnings winner if you have extra capital. And then EXTR. This stock is a price volume BOP scan stock, and it was also confirmed in my new 52-week highs on above average volume. Once again, it has to be a long signal because I got a surge in BOP to a much higher green level, got a surge in volume, and I got a surge in price with a PPP signal, so I got to take it. But the best speculative long position tonight is FRM. FRM, no surge in BOP required because it's already had max green BOP since the beginning of November. Even better. Pulled back on low volume, and now we're starting to break out right here on above average volume, a surge in volume, and a pocket pivot point signal. So this one, much better. Price volume BOP scan stock, confirmed in my max green BOP for 5-day scan. So 2% in FRM. Extremely busy past 2 weeks, but I'm back to being fully invested, and the market looks like it wants to rip higher. And if you guys didn't see KBIO after hours, the stock closed at around 207. It's hit 1750 last time I checked after hours. Go check it out.